Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. The Fed's unscheduled interest rate cut may have halted the free fall of global stock markets, but lower interest rates will put new pressure on the U.S. dollar. Since 2003, it's lost about a third of its value against the euro, the British pound, and other currencies. But in the free trade environment of a global economy, a low dollar has proved to be a competitive advantage, as exports of U.S. goods and services have increased in proportion to the dollar's fall. Every cent the U.S. currency loses means that American-made products become cheaper and therefore more competitive for those paying in euros and sterling. A low dollar policy is not just benefiting American exports. Countries whose currencies have been pegged against the dollar have seen their export industries soar over the last few years. What does the recent rate cut mean for traders? I've asked J. Christoph Amberger, executive publisher of the Taipan Group and editor of Taipan, to point out profit opportunities. Welcome, Christoph.
Thank you.
Now, you were on our show a couple weeks ago, and it was your feeling that the recent market mayhem is actually due to a technical correction. Is this still your opinion?
Well, if we're looking at it, the fundamentals that were underlying the record highs in the Dow, in the NASDAQ, in other stock markets around the world in July are still in place. We have decent GDP growth in the US. We have extraordinary export growth. We have businesses making record profits, we have businesses investing these profits, and we have almost historic lows in unemployment. On the other side, we have shaky mortgage lenders who we have known about for years, and we have delinquent mortgages that maybe make up 2% of the entire mortgage market in the United States. All this, we have risk that is spread around the world, as we have seen in the domino effect of this crisis around the world markets. So really, I believe what we're dealing with is a correction within a trend and not a trend reversal. So I would still stick with my technical correction.
Well, what do you think of the Fed's recent cut in interest rates?
Well, obviously, a half-point cut in the prime lending rate is not going to revive the real estate boom. It's also going to do very little for companies who are flush with cash, flush with profits, and really experience no real credit crunch at all at this point. It is, in my opinion, more a symbolic gesture to show that someone is awake at the helm, and it's also geared, of course, to I don't want to say subsidize, but sponsor companies and businesses and industries who make their living leveraging interest rate differentials, which are hedge funds, equity funds, and lenders.
So that's who you think will profit from this cut?
I do believe that the carry trade, for example, will profit from it, but I believe that anything that the main beneficiary really is going to be the American export industry again. And not just the American export industry, but again, as you said in your introduction, the countries who really have pegged their export growth on the US dollar.
Do you see some of the other markets globally profiting from this rate cut?
I think it's going to be the usual suspects who always profit from a low dollar, which are China and especially Hong Kong at this point.
Now, why Hong Kong?
Well, as you know, the Hong Kong dollar is pegged to the US dollar at a fixed rate. Beijing, however, had to allow the yuan to float reluctantly against the US dollar, so in the last year it has gained about 10% against the US dollar and the Hong Kong dollar. Now, Hong Kong is in a unique position. It's experienced an incredible economic growth. I believe in the last 2 quarters it approximated about 6%. Neighboring economy, China, is experiencing 12% growth. Hong Kong products and services are now, by virtue of that exchange rate peg, more competitive in China, really just across the border in Shenzhen, Guangdong, than they are, elsewhere. There's great demand for those products that are produced in Hong Kong, financial services, and especially also the software industry. I believe Hong Kong really is going to be the prime beneficiary of this particular interest rate cut for the next 3 to 6 months.
So where do you see opportunities for investors and traders?
Well, of course, there's always a great opportunity for traders who have the guts to leverage, a drop of 10, 20% in any market or stock into a buying opportunity when everyone is selling, like we have been seeing in the last couple of weeks. I believe now is a great time to buy select Hong Kong stocks in view of the expected revival of the upward trend and in view of Chinese demand, especially for Hong Kong goods. So I would be putting my money on select Hong Kong stocks at this point.
Would you be willing to write some of that up and make it available for our viewers?
Funny that you should ask. We have done that already, and as we release this video here, we will also release a white paper and special report that TFN and Smart Trading Action Alert viewers are welcome to look at, download free of charge on our website.
Fantastic. Well, thank you so much.
You're welcome.
To read Christoph's research report, you can go to the homepage www.taipanfinancialnews.com and look under Investment Strategies. To learn more about Christoph's newsletter Taipan, go to www.taipanonline.com. Please tune in next week for another profitable opportunity on TFN Smart Trading Action Alert. For J. Christoph Umberger and TaipanFinancialNews.com, I'm Laura Cadden.